All right, now you can see that we are out of the market, and the market eventually had a reversal. You see what's happening here? There's a reversal, and if we hadn't put the stop loss at that point, this would have been a loss at our own end. You understand? Now this point is very tricky because most times the market tends to reverse back into profits at points like this. So you have to be very careful, and also you have to be patient. Okay. First of all, this entry is not really accurate because this has like a lot of resistance at this zone. You get, has kind of like a lot of resistance at this zone. But either way, it's just for reference purpose. You get. Now, as you can see, if we're still in this market, all this movement would have been a loss for us. Would have been here having some drawdowns. But now we are out of the markets. All this movement is not our concerns. So what you do now, you watch the market, and you have to be patient also because of this type of strategy. It's safer, and it's going to make you spend more time in the market, but it's for your own good. You understand? Now you're going to watch and know if the market is coming back or it's going in the opposite direction. All right, so presently we have a sell, so what we're waiting for is a sell. Now, just in case, because I'm not sure I can be able to like hold on to this video for that long, but there is a possibility that the market is going to come down back, and there's also a possibility that it wants to have a reversal. You understand me? So we just have to watch out for it and know the next move. Okay. All right. Let's see. If it breaks it, then we're in back. If it doesn't, all right. So normally we should have put in. All right. Um. Yes. Now, if we had put our sell limit at this point, it would have reversed and probably been in profit by now. But this is what I'm trying to say. This whole thing is really tricky. You understand me? So we have to be very careful. If there is a reversal like this, most times, because of the entry point, actually, most times it goes and has a very high pullback and all. Most times it doesn't. But at this point now, where there was a reversal at this point, it's also wise that you wait and confirm if it breaks this point again before you jump in, or else it can reverse and come back to your entry, stuff like that. So what's most important is that you closed with either your balance or with little profit, but not in loss. That is the main drive here. Now this kind of market, now what we're waiting for, it's going to actually come down. It just wants to like test this whole thing. Normally, um normally this is not supposed to be an issue if everyone has enough capital. The stop loss is supposed to be somewhere around here, somewhere around here. So all these little movements is not supposed to like kick us out of the markets or anything. All right, so I guess it just broke out. All right. But this zone is like really tricky. That's the issue. If you take a look at this region, you see how many movements occurred in this zone. So while it was about coming down, it had like a mixture of movements before eventually going back up. Now it's come back to this zone, and it's about to have some mixture of movements again. So it's actually a tricky zone. But just I'm not sure I would have given a trade in this type of zone. But I hope you guys get the whole ideology. Now, if something like this happened, and you see that okay, it has started going up, going up, going up, you take note for this region, the last point that it came down. Let me show you something. This is the last point it came to. You take note of this point. Now, as the market is doing all these movements, just take note of this point. Probably you put a line like this also. Take note of the point. And if it doesn't come back to this point and breaks it out, then I believe by all this time you would have gone out of the market. The way we're out of the market now, and you leave it. You wait until the market comes down, and do whatever it does. Then it comes back to our entry point, which is this one that we marked. Understand? So this is how to avoid being in the market when all this occurs. So you put your lines. This first line is your entry point. This second line at the bottom is what you are looking out for. Okay, if it breaks out here, we're entering back in. Because it's not every time I'll be active online to tell you, okay, go back in again. And I do not know the times that most of you will see the signal and jump into the trade. So we have to be very careful. Okay, yeah, the plan is that we do not want anyone to blow their money. I want each and every one of us to trade safe and smart. Okay, these are ways to avoid unnecessary loss. You get. Eventually, this market has a potential of coming down, and you know how this market is. Most times, it can be really crazy. So that is for that. So you know what you're waiting for, you know what you're looking for. I cannot say the exact time that everyone goes into the market. I can only say and know when I go into it. So it's left for you guys to be able to figure out these things by yourselves. And I've told you guys I do mentorship. If you guys want to learn how to trade, the offer is also still there so that we don't have to go through many stress in all this trading journey. So that is for that. And I look forward to having you guys find more opportunities and making more profits in the trading journey. Good luck. So remember, this is it. This is what we're looking out for the market to break this zone, the last point that it went to before a reversal, the lowest or last point that it went to before a reversal. If it breaks out here, then you know you can jump in back and put your sell and watch out, and immediately starts making profit. You put your stop loss again at your entry, just like that. You're trading safe, and watch out for your TPs. Another thing, yes, once it gets to a TP, please and please, if you want to trade safe, remove greed from your mind. Once it gets to a TP1, let's say this is TP1. Let's say this is TP1. Now, once it gets to TP1, what you have to do is remove your stop loss from your entry and wait. Once it goes beyond TP1, a little bit up to the point where you can put your stop loss, you move your stop loss somewhere like here. That way, for this type of market now, once it reverses, you are closing with profit in TP1. You get. Or if you want to say, okay, you intend on giving the market space to do whatever movement, you can put it halfway from your entry and your TP1. Put it halfway. Just put your stop loss in between. Now, this is how you figure out the figures. This movement here with this black part here, these are the different prices. Whatever price here is what you put in. I believe you guys know how to put stop loss, how to put TP, how to open buy limit, sell limit, all that. I've done videos on that already. Now these are ways to avoid points where everybody's in profit and somebody else closes in loss. That is the most painful thing that can happen, and I do not want that for you guys. Okay, so this is it. Once it gets to TP1, it's either you put your stop loss halfway, like in between your entry and your stop loss. So the same thing when it gets to TP2, the same thing. You find a point where you move your stop loss. So if peradventure this year this red line is TP2 and it gets here, it's up to you. It's either you go halfway, something like this. I think this is halfway. Either you go halfway or you go a little bit below your TP2. You put your stop loss there. If the market turns back and hits your stop loss, fine. You have closed in profits. You are good to go. You wait for the next day or you wait for the next trade. Just like that. That way, we will all be moving smoothly and softly. See this market now is still dancing around in this region, and in the process of dancing around, it's playing with people's money. Like right now, it's back into profit. At that moment, it went back to loss, stuffs like that. And most of you don't have that equity. You understand? But I presently am not inside the market. I am not experiencing this whole dancing movement. I'm not having a high BP, watching my phone. I'm worried and whatever. You get. And lastly, please do not be scared to close in loss. That is the one key thing that keeps on making people blow accounts. Learn to control your emotions. I can only give you the signals, I can only tell you this to do, but you need to learn by yourself how to control your emotions. Okay, learn to control your emotions. Once you see that the market is going to a level, I don't know what is going to be your risk to reward. There's a certain amount that you are willing to risk in a day. Now, for the plan that we have, the total amount that anybody should risk on any market is $10. Once by adventure you follow this plan, and the next time you entered, let's say we entered here now and it started going in the opposite direction and it's in loss, and you say okay, you want to hold it till it comes back to enter that your stop loss, the highest you should risk is $10. $10. If it gets to $10, now this is how you calculate it. Yes, let me just quickly do this.